Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. The U.S. Supreme Court has struck down President Donald Trump's sweeping global tariffs. The court says Trump exceeded his authority by invoking a federal emergency powers law to impose the so-called reciprocal tariffs, as well as targeted import taxes to address fentanyl trafficking. The ruling does not address the extent to which importers are entitled to refunds. If mandated refunds could total as much as $170 billion. Canadian retail sales saw a decline in December, but are on track to rebound to start the year. StatsCan says receipts for retailers fell 0.4% in December, but a flash estimate suggests they are expected to rise 1.5% in January. The agency says despite U.S. tariffs fueling uncertainty, consumers continued to shop in 2025, with sales jumping compared to 2024. Sales were partly supported by a rush to buy cars at the start of the year as consumers tried to get ahead of tariffs. Shares of Eldorado Gold are sharply lower today, off by 9%. The company is warning that production will be lower due to a delay of a key mine starting up. Eldorado says its mine in Greece won't start production until the third quarter of this year. It was previously expected to be up and running this quarter. The delay represents a 15% decrease in the company's production forecast. Taking a look at the markets, and the TSX hanging on. It's up by about 0.15%. It will end the week up and in record territory right now. Metals and mines driving it. And south of the border, a lot of reaction now to the Trump decision, the U.S. Supreme Court ruling on Trump tariffs, and the market's liking that so far. The S&P 500 up 0.6%, 0.62%. The Dow 0.22, and look at the Nasdaq bouncing back 1.14 right now. Okay, for more on the U.S. Supreme Court decision on Trump's tariffs, let's bring in Nicole Gorton-Caratelli of Bloomberg News. Nicole, thanks for joining us. What is the impact expected to be for Trump's use of tariffs going forward?
Hi, thanks so much for having me. Yeah, so this was a watershed ruling. We expect that over the next few weeks and months, we'll be hearing from the administration about their plans to replace a lot of these duties. So in the longer run, we don't think there will be a huge change to the level of tariffs that the U.S. is imposing on other nations. But for sure, this ruling itself strikes down about 2/3 of the tariffs that President Trump has imposed since coming back into office in January. So right now, the U.S. average tariff rate before the ruling, on the eve of the ruling, was about 13.6%. That was almost 11 percentage points, a little bit more than 11 percentage points higher than when he started in office. And after the ruling, it will fall to about 6.5% before any new replacement duties are announced.
And what kind of options does he have to impose those new duties? Where can he turn to now?
There are several possibilities. You may have heard of Section 301 that was used heavily for tariffs on China in President Trump's first term. A lot of these other authorities, so Section 301, like I mentioned, there's another called Section 338 and Section 122. They require different kinds of justifications and legal processes, so they're not as flexible as IEEPA, which is one of the reasons why we think President Trump used IEEPA so heavily. It allowed him to very quickly impose with a lot of bandwidth over what rates and countries it applied to, and that's not the case with these other authorities. We think that the most likely scenario going forward will be that temporarily new rates are imposed under Section 122, which is capped at about 15%, and it would apply universally to all trading partners, and that will allow the administration to buy some time to pursue investigations under further sections to impose more permanent tariffs going forward.
Okay, and the tariffs that have been paid, are there refunds coming? Did the court address that? Where do we stand with the money that may go back to people?
It seems like the court has kicked this back down to the lower court, so it's about $170 billion that we estimate in refunds. How exactly that will be paid out wasn't fully answered today, so we'll have to wait and see what happens with that.
And have we heard any reaction? Have we heard from Trump himself or from the Democrats or Republicans?
I believe just some news is coming out on social media. I haven't followed all of it yet, so I'm not sure yet, but I'm sure we will in the hours to come.
And leading up to this, what have the Democrats been saying about a possible ruling from that side of the court?
I think that broadly this ruling will be welcomed by the Democratic Party, but as I mentioned before, I think the largest consequences of this will be some chaos in the short term, some walk back of the sort of unilateral tariff authority that the president has taken advantage of, but ultimately a lot of these rates will be restored.
Okay, Nicole, thank you very much for joining us with that update. We appreciate it.
Thank you for having me.
That's Nicole Gordon-Caratelli of Bloomberg News. Coming up, we'll get some investor reaction to the Supreme Court decision, the U.S. Supreme Court decision to strike down Donald Trump's tariffs. The U.S. Supreme Court has struck down President Donald Trump's sweeping global tariffs. For more on this, let's bring in CTV's Jeremy Sharon to get some Canadian reaction to this. Jeremy, thanks very much for joining us. Quite the ruling today. What are we hearing from Ottawa?
Yeah, look, Roger, big impact, but, in terms of Canadian impact, not quite as large as for some other countries. We're talking about $150 billion in total revenue the U.S. Treasury has collected as a result of the collection of tariffs that are going to be impacted by this Supreme Court decision. About $2.4 billion U.S. dollars of that is as a result of Canadian imports. So, look, in terms of refunds that are going to try and be collected, that is going to be a whole process. But most of those refunds are going to be going to U.S. firms. Sure, some Canadian companies and businesses that do some cross-border business could have, some impacts and be entitled to a portion of refunds here. But I think the bigger impact when it comes to Canada will be on the pressure this puts on the U.S. administration when it comes to its overall trade policies and its use of tariffs. The tariffs that are far more impactful on Canada are the sectoral tariffs, the tariffs that are impacting the auto sector, the steel and aluminum industries that are completely separate from this Supreme Court decision and the IEEPA tariffs that are in question here. So, the greater impact will come in whether or not this puts enough pressure on the U.S. administration to look at changing course when it comes to its tariff policies. And I think on the impact this will have on CUSMA negotiations between Canada and the U.S. Canada has been spared from much of these tariffs in the first place as a result of the Canada-U.S.-Mexico agreement that exists. The free trade agreement that we have with the U.S. has helped us avoid some of these tariffs that were imposed and that are being impacted by this U.S. Supreme Court decision. And so in renegotiations, Canada will have the ability to point to the growing opposition that U.S. President Donald Trump is facing when it comes to the way he has imposed some of these tariffs. We're talking about now a legal decision, at the judiciary level that is completely opposing his position on these tariffs. There is pushback at the U.S. House of Representatives as well, including from Republicans on U.S. President Donald Trump's use of these tariffs too. So, Roger, I think that when you look at the impact and potential impact here in Canada of this Supreme Court decision, you have to look at the bigger picture and the fact that this could be, perhaps, maybe, the signal or the start of a shift in policy that this administration could be forced to take as a result of growing pushback. And the president is going to have a hard time pushing back against a Supreme Court decision. They have said they'll explore other legal means to impose tariffs and try and recoup the revenues that they'll now have to pay back as a result of this. But I think public sentiment is changing and there's growing pushback, and I think that is where the biggest impact is for Canada.
And have we heard anything from the Prime Minister's office or ministers?
Yeah, Mr. Dominic LeBlanc took to social media posting a brief kind of reaction to this. Who is the minister in charge of Canada-U.S. trade relations. And his overall consensus is that this is a good ruling for Canada. This is good and it helps Canada's position. But he was quick to highlight the fact that Canada is resolute in continuing to focus on other tariffs that are still in place, specifically the sectoral tariffs that I mentioned off the top that are impacting the auto sector, the steel and aluminum sectors that are very impactful. And he goes on also to talk about the importance of continuing to focus on CUSMA renegotiations and how all of this furthers the importance for a good result in those renegotiations. All
right, we'll wrap it up there, Jeremy, but thank you as always for joining us.
Of course, anytime, Roger.
CTV News' Jeremy Sharon. And as we were talking about, President Trump having his tariffs knocked down by the Supreme Court. And joining us now to get a little bit of a perspective from investors and their thoughts on it is Michael DeHaal, Senior Portfolio Manager at Raymond James. Michael, thank you very much for joining us. Initial reaction, we've been waiting for this for a while, and all of a sudden it's here, and it almost doesn't seem real.
Yeah, thank you, Roger. Yeah, we've been waiting since November for this ruling decision to come out, and it's finally come out. The market reaction is positive. I think investors are relieved. So you're seeing a bid on a lot of the retail stocks that were taken down during Liberation Day and all that, right? You're also seeing emerging markets. India also going higher, and other emerging market countries that were impacted by the tariffs. So now, it's a big relief.
And I mean, the reaction from the markets right now, I mean, that's the whoo. But I mean, now we have to start processing it because there are options for him to bring in tariffs, different tariffs, but still bring them in.
Yeah, but that would take time. Honestly, that's going to take some time. And I think if he does bring in uses other levers, other sections and authorities, right, that will probably take time, and it'll probably be under more scrutiny, right? But I think the first question is how and when are these tariffs going to get refunded to these companies? Another bonus is that we could see inflation come down, which could help the Fed cut rates this year as well.
So there's a lot. Could Trump? Do you feel Trump could be caught up in that and have no choice but to move forward with not trying to bring any other tariffs in because he's been pushing for that cut with the from the Fed, and if the markets react to this and
It could be. Obviously, Trump wants lower interest rates, right? But at the same time, Trump has been using this card to create trade deals with other countries around the world and stuff, right? So if countries are looking at Trump now that, hey, your Supreme Court has overturned these trade deals, right? Obviously, Trump's going to use other levers for this.
And who stands to benefit? I mean, let's go back to the rebates or the returns. Yeah. We might not. I mean, we're not even sure if companies will even see that. Will that have an impact? I mean, they've already factored in for it, and so does it just be a bonus if they actually get the money back?
Yeah, it'll definitely be a bonus, right? Companies like Costco, they actually did, have a lawsuit against the administration on these tariffs, right? So it could, if the companies do get some of these refunds, it'll definitely increase their gross margins and all that, right? That is a bonus. The sector that does lose out is a consumer. Obviously, consumers will not get repaid back the higher prices that they did pay in the beginning, but companies do stand to benefit, and that's where you're seeing the positive reaction in retail stocks, and even auto stocks have gone up as well.
Okay, and that's the initial. Longer term, for which sectors stand to benefit the most from this, do you think?
Retail consumer discretionary. Since the beginning of the year, you're seeing a rotation out of consumer discretionary into consumer staples. I think it's been the biggest divergence between consumer staples and discretionary in 13, 14 years, right? Staples sector is up 15% for the year. Discretionary is down, I think, 11, 12%, driven primarily by Amazon and Tesla, right? So discretionary does stand to benefit from this ruling, as well as other sectors. Financials is another sector that we do like that could benefit from this. Lower interest rates, increased M&A activity, IPO listings could help financials. And obviously the third sector is technology. Technology, since the beginning of the year, has been under a lot of pressure, particularly the software sector. And we do think that this could help technology stocks, have a bid.
All right, and let's talk about that with the tech stocks and software with AI. They've taken a pummeling with it. Is that overreaction?
We think, Roger, it's overreacted, it's overdone. I think markets have overreacted, thinking that AI is going to eat the lunch of some of these big software names. You're seeing Microsoft down over 17% for the year. Right? If you look at the last quarterly earnings, they had a 40% year-over-year growth in Azure and in their cloud business, right? And they're seeing monetization of AI. The Copilot has 15 million paid users, right? So, some of these software companies have overdone on the downside. Even cybersecurity, Palo Alto Networks reported earnings the other day. Great top line, bottom line increase in revenue and earnings per share, but that stock was taken down with the AI jitters as well.
And with that, I mean, what gives you the confidence that software will be integrating AI as opposed to being replaced by it?
Well, we do think that software, it goes hand in hand, right? So like I mentioned with ServiceNow, with Microsoft, they're using AI and they are definitely monetizing AI in their cloud business and in their software solutions for customers.
And are we starting to see more and more companies now? Is this the year that we see that with the integration of AI?
Absolutely.
We've moved beyond everybody talking about AI.
Yeah.
Let's start I mean, it's being used obviously, but really being used.
Yeah, and this is the year where you're seeing the benefits of AI. So you're seeing it with Meta even. And Meta, I know they're getting a lot of scrutiny over their CapEx spend on AI. This year is spending between $115 to $135 billion on AI in 2026. But you're seeing the monetization in Meta, right? They have 3.6 billion daily active users that they can leverage AI tools, models with these users among all their different business lines.
All right, I want to get in one more that you've talked about Meta and Microsoft, but Morgan Stanley, we're staying with the M's.
Yeah, triple M today. Morgan Stanley, it's a great financial company in the U.S., right? They stand to benefit on a number of different levers, a strong economic backdrop for the U.S., increased stimulus, monetary easing. All that is a positive for the U.S. financials. And Morgan Stanley being a leading investment bank, they do benefit from IPO listings. And we're going to have a number of possible big name IPOs with OpenAI possibly and SpaceX listing this year in the U.S. And Morgan Stanley is standing to benefit. And also with elevated equity markets, the wealth management business do get increased revenue from higher stock prices.
Okay, we're going to have to wrap it up there, but thank you very much, as always, for joining us in studio, Michael. Appreciate it. Have yourself a great weekend.
Yeah, thank you.
Cheers. That's Michael DeHaal, Senior Portfolio Manager at Raymond James. Up next, the Bloc Québécois is pushing an amendment to hold banks liable for fraud. Our next guest will break it down. The Bloc Québécois is calling for banks to reimburse customers who are victims of fraud, with reported fraud surpassing $500 million in the first 9 months of 2025. Our next guest believes this amendment would create a stronger incentive for banks to prevent it. To break this all down, we're joined by Sarah-Yves Levac, a lawyer at Option Consommateurs. Sarah-Yves, thank you very much for joining us.
Hi, thanks for having me.
You like what the Bloc Québécois is pushing. What do you like about it?
So, as you said, it's an amendment that would create a stronger incentives for banks to have protective measures in cases of fraud. It limits the liability of consumers who are victims of fraud to $50, and it limits their liability, once they have informed the bank of the fraud in their account. And it's also providing some protections if ever a consumer has initiated a payment following a scam or given some information following a sophisticated scams to a fraudster.
And how much of this is on the bank and how much is on the consumer themselves? Like, how would they be able to draw a line on who's at fault for this?
Yes, so the bank would have to reimburse unless the consumer has been grossly negligent, or in Quebec, a gross fault. And this standard is a standard that is already put in place in the Bank Act in cases of frauds on your credit cards. So it would be then applied to your bank account now, because there is no legal protection on frauds in your bank account. And this resembles also the system put in place in the United Kingdom, where the banks have to reimburse the consumers unless they have been grossly negligent in the scam.
And what would define grossly negligent? Like when would you be at fault for what happened?
Yes, so it's in the UK, it's a high degree of carelessness. So if you've been informed by your bank, for example, that you have suspicious transactions, or if you've given if you have been if you've been informed that the fraud, that this seems like a scam, and you're still going forward with the transaction, you might be grossly negligent, but it's a high degree of carelessness in those cases.
Like at my bank now, I get a note that says, when you're doing an e-transfer, do you trust this sender? I guess they read what the email address is. If I say, yeah, I know, and I'm sending the money anyways, would that then put me into grossly negligent?
We do not think so, because in certain circumstances, the fraudsters are have a very sophisticated scam. We've seen people being called by fake representatives, so fraudsters, I would say they are working for the bank of the consumer. The caller ID would have the name of the bank, and the fraudster would have information on recent transactions in the consumer's bank account. In our view, these are sophisticated scams where even a diligent consumer would fall victim, or would be would maybe incented to give some personal information or to complete a transaction with the fraudster on the phone. And in our case, these consumers are not grossly negligent. They're victim of a very sophisticated fraud.
Now, is the system in the UK working? Is it reducing fraud?
So the system in the UK has been put in place in 2024. Within 1 year, the number of frauds has been reported as decreased from 15% by 15%. Sorry. So they have seen in the UK, the regulator has said that the system put in place has actually reduced the number of frauds in the United Kingdom.
Now, does that say that the banks here aren't doing a good enough job, or that they could be doing more?
Well, it's our view. Most banks will normally have a system put in place to prevent some frauds. But in circumstances where consumers call us, sometimes they will call the bank within minutes after the call ended with the fraudster, sensing that something is amiss. And then the bank will say that there is no way to get reimbursed after that. We've had circumstances where consumers have gone to their branch to withdraw a large amount of money, thousands of dollars, and this has not raised any red flags. So the new regulation, if it's adopted, it would put a strong incentives on banks to have better protections for consumers in cases of fraud.
And I mean, there is incentive, I guess, if you're going to have to pay $645 million, that affects the bottom line.
Yes, but right now, consumers would largely bear the brunt in the cost of fraud. So as you mentioned, it's cost Canadians $645 million last year in cases of fraud. And we are suggesting to have a little bit more fairness in the system, where banks will have a liability as well in cases of fraud.
And with AI, is there more that needs to be done? Would you like to see more added to this bill?
That's a good question. We haven't looked at it. We know that Bill C-27 a couple of years back was putting in place a system with AI. Remains to be seen if this type of law, a new bill would be put in place to have a better legislative framework for AI.
And I mean, and just quickly before we go, the $645 million, that's reported. How bad is fraud? I mean, that's obviously not everybody reporting it, because a lot of people are embarrassed.
No, it's estimated that this is only the tip of the iceberg, and that between 5 to 10% of people will report fraud. So the number we have of 645 million is really just a small portion of the actual frauds that are occurring in Canada.
So it's in the billions. Okay, Sarah-Eve, thank you very much for joining us today. We appreciate it.
It was a pleasure.
Sarah-Eve Levac, a lawyer at Option Consummateurs. Up next, there are signs Canadian retail sales are bouncing back after a soft finish to the year. We'll break that down when we come back. The U.S. Supreme Court has struck down President Donald Trump's sweeping global tariffs. The court says Trump exceeded his authority by invoking a federal emergency powers law to impose the so-called reciprocal tariffs, as well as targeted import taxes to address fentanyl trafficking. The ruling does not address the extent to which importers are entitled to refunds. If mandated, refunds could total as much as $170 billion. Shares of Barrick Mining are slipping off by 3%. Newmont has sent the miner a notice of default after finding evidence of alleged mismanagement at their Nevada joint venture. Newmont says Barrick allegedly diverted resources from Nevada gold mines to benefit its fully owned 4 Mile project. Barrick CEO Mark Hill says he disagrees with Newmont's claims, but is limited by the terms of the agreement in what can be said. Shares of Hudbay Minerals also trading lower, off by 4% after the company posted fourth quarter revenue and profit that came in below what analysts were expecting. The Canadian miner also saw production decline across gold, zinc, silver, and copper. Now, despite the results, Hudbay saw revenue increase 25% year over year, helped, of course, by higher metal prices. And those metals are helping to drive the TSX right now. Still in the green by a quarter point, up in record territory again, nearly 33,700. South of the border, markets reacting favorably, although the Dow Jones pulled back a little bit, reacting favorably to the news from the U.S. Supreme Court about Trump's tariffs. You can see the S&P 500 up by 0.38. The Dow almost a wash right now, and the NASDAQ is up by 0.72. Canadian retail sales are on track to rebound to start the year after a sluggish end to 2025. We sat down earlier with Earl Davis, head of fixed income and money markets at BMO Global Asset Management, to discuss if retail sales are an important metric for the Bank of Canada.
They are an important metric for the Bank of Canada. Having said that, it's not like the U.S., where U.S. is a consumer economy, where the consumer spending drives the economy. I would say in Canada, we're more of a housing economy, from the jobs created through housing, as well as the spending for durables because of housing is a bigger driver. So retail sales is important. The Bank of Canada will be encouraged by the number that we see. We'll have to see if this trend continues or if the actual number is close to the preliminary estimate. But it is a good thing, and I think it reflects increasing consumer confidence.
Looking at the fixed income markets broadly, you think there are increasing signs that investors expect one cut from the Bank of Canada interest rate reduction this year?
Yes, and what's interesting is towards the end of 2025, the market was expecting a hike or a chance of a hike in 2026. Our team did not believe that. We always believed there'll be cuts in the market. We were calling for 1 to 2 cuts in 2026. Despite the market discounting hikes, we still believe there's going to be 1 to 2 cuts. We ultimately believe there'll be 2 cuts this year. And the main reason why is CUSMA. The uncertainty around that. You saw in the Bank of Canada minutes that they actually highlighted increased uncertainty because of Donald Trump. And to me, that's like words that open up the easing possibility again. And we think if they're going to ease once, they don't ease once. You know, if you're going to ease, you ease twice, because you think you need to impact the economy somehow.
The housing market, you don't see much of a turnaround there this year?
No, unfortunately not. We don't see much of a turnaround just because of the inventory overhang. You have to get rid of the inventory overhang in regards to new condos, new townhomes being built. The key way to doing that is lower interest rates. You lower the entry costs of housing affordability. That's helpful in getting rid of that overhang. We do, however, believe that the overhang will be taken care of 2026. So we do see us coming close to the lows, but we haven't turned around yet.
What about the States? A weakish number for the latest period on GDP. What is your take on the U.S. economy? Is it just ticking along nicely?
Yeah, ticking along very nicely. And when you look at the details of the surprise weaker number in GDP, the biggest driver was government spending or lack thereof, and that was driven by the shutdowns. So a little bit of noise in those numbers. They're actually better than they look because if you kind of remove the government shutdown. So yeah, we're very constructive of the U.S. We believe they're on an upswing from a growth perspective, and we believe this will be the low print for, represents 2025, but the low print in 2026. So
can President Trump claim that he's done a decent job of preserving, keeping economic growth solid, even though, despite the massive disruption around tariffs?
Yeah, you know what? I smile because I think he'll proclaim that no matter what the number is. Right?
That's true. Yeah.
If it's a low number, it's someone else's fault. If it's a good number, it's his. So he'll proclaim that it's good without a doubt. But yes, and you have to remember the key thing in the U.S. right now is that the tax refunds are coming out. They're going to hit consumer pockets, and that is expected to be significant due to the tax reduction from the Big Beautiful Bill. And those refunds come February, March, April. So we expect that to be very supportive of the U.S. economy, at least for the next several months. And we think that'll play throughout the year. And
just finally, we're very tight for time, but you're generally saying if you have a bond portfolio that you're managing, keep it short because there could be drops in bond prices, rises in interest rates?
Yeah, we're saying two things. You want probably a maturity of around 5 years because there's more volatility outside of 5 years. And the second thing, which I think is more important, you do want to have own corporate bonds. We do believe this is a supportive environment for credit, for risk assets, and we are overweight credit and risk assets, and we'll go more overweight if the opportunity presents itself.
That was Earl Davis, head of fixed income and money markets at BMO Global Asset Management. Coming up, AI is reshaping the market fast, and some stocks are feeling the impact more than others. We'll see where the real opportunities may be hiding after the break. As AI continues to disrupt the market, some companies are feeling it more acutely. We sat down earlier with Barry Schwartz, president and CIO of Baskin Wealth Management, and he sees this, though, as an opportunity for stocks like Topicus and Constellation.
We've seen a gigantic pullback in software companies, right? Constellation is part of that group. We've seen results.
It's getting beat up, isn't it?
Every day. Yeah. It's like the opposite of gold.
And it hasn't done anything, though. It's not like it's deserving of it.
Well, let's get to that. So they are reporting earnings in March. We'll see if they talk about if there's been any impact as a result of AI. I would assume absolutely none. I think on the conference, this is, by the way, the first time they're doing a conference call in a very long time. It's a new CEO, Mark Miller, as Mark Leonard unfortunately stepped down due to health reasons. I think they're going to discuss about all the benefits they're seeing and using AI to improve operations in their company. And they'll probably just say it's business as usual. In the meantime, of course, the market doesn't believe it. Yeah. And this is very similar to what happened, I guess, in the pandemic. Remember when oil went negative and everybody had an opinion and oil's never going to recover? Or every single time Amazon gets into a new vertical, it kills all the retailers, right? Or getting into pharmacy, it kills the pharmaceuticals. The market, rightly so, reacts to these things because it adds a new unknown. Yeah. But what the software companies are saying right now is it's going to help us. It's going to help us lower costs. It's going to help us improve production. We're going to be able to sell new features to our customers. Our products are very hard to rip out. One of the things that people don't understand about Constellation and Topicus is it's not a software company. It's an investment company that makes acquisitions in software.
But isn't that the concern, that they might not have things to buy?
Well, that's not the be-all and end-all of this company. They want to reinvest cash flows into anything that delivers high rates of return. They've already started making acquisitions outside the software business. They made one recently in data testing for water utilities. We see Constellation. They're going to have so much cash flow to put to work. We see them doing some radical things, whether making acquisitions outside AI, maybe even starting a buyback. Mark Leonard, the CEO, said, I'm not going to buy back stock. He's no longer the CEO anymore. So new changes at the helm, kind of like at Berkshire Hathaway.
Yeah, and somebody always wants to bring in, I mean, as much as they want to continue, they want to bring in their own brand, right?
Yeah.
And so you could see a buyback.
So the market is absolutely right to be worried about AI's impact on software. If you're just selling data and repurposing it for easier to look up and use, you're done. But if you have proprietary data, you have regulatory moats, you have network effects, you have years of connections and be able to interpret the data better, then AI will be a tool to help your business. That's what Constellation continues to argue. They haven't been quiet about it. All their companies have been very active discussing how AI is going to help them. I think the market has got it completely wrong. We recently put our money where our mouth is. I sold shares in Adobe to buy more Constellation for our clients, and I also bought a lot more for my personal account recently, too.
Could you see Constellation eventually moving right out of software, depending on what AI does, because they have the ability to pivot?
Well, they still have thousands of software companies that they own.
I know, but eventually, but who knows, right?
Berkshire Hathaway started as a textile mill, right? Apple used to make computers, now it's iPhones. Great companies, great management teams adapt and they pivot. At the end of the day, as a long-term investor, I don't know the future any better than anyone else. But what I do know is when I partner with great management teams who have a history of allocating capital at high rates of return, it generally works out. And great management terms and great businesses can adapt. I'm not saying that software is going to be positive or negative for Constellation, because I don't really know the future right now. But from what I'm seeing from the evidence, it's going to be a tailwind, and we're excited to buy more at one of the cheapest valuations I've ever seen for the stock.
All right, and then Topicus.
Topicus is like the little baby of Constellation, focused more on Europe. There's a lot more regulatory concerns in Europe. We've seen recently that a lot of tech companies in the U.S. may be barred from working in Europe, right? Germany wants to not work with Microsoft anymore. These could be great things for small software companies that are European-based. So I think Constellation and Topicus, the market should be making those charts look the other way.
All right. And bigger picture with AI, what are you seeing for this year? What's your feeling for it?
I mean, the amount of its lightning speed every single day. What got us worried about Adobe is even today, Google's announced or someone has announced a new photo illustrator type product, right? And so the amount of innovations is coming lightning fast. And the companies are seeing great returns on these investments, right? Amazon and Meta and Google, they're not morons. They're not throwing money out the window. They are seeing great returns on this, and they expect this to be gigantic. And so we've seen a pullback in, the Magnificent Seven recently with some of the tech stocks. I think it's a good opportunity to start buying more.
Barry Schwartz is president and CIO of Baskin Wealth Management. The U.S. Supreme Court has ruled against Trump's global tariffs. We'll have more on that after the break. The U.S. Supreme Court has struck down U.S. President Donald Trump's sweeping global tariffs. Here to help shed some light on the ruling and what it means for Canada is Diamond Eisinger, the former special advisor to Prime Minister Trudeau on Canada-U.S. relations. Diamond, thanks as always for joining us.
Thanks for having me.
Initial reaction to the ruling, is it what you expected or are you surprised?
Yeah, this is such a big deal, both for the United States domestically and for partners all around the world. Trump has made tariffs so central and essential to his agenda in the second administration. And it's particularly meaningful timing. We've been waiting for this decision, of course, for a number of months, unsure which specific day it was going to break on, but right ahead of the State of the Union address on Tuesday, where Trump is to be setting out major priorities for the year ahead. I can't imagine that tariffs won't be a dominant theme of that as he tries to pivot to new ways to still collect revenue from countries around the world.
For the timing on this, I mean, do you think that was the reason, was before the State of the Union, or this is just the court being the court?
Yeah, this is just the court being the court. We've been waiting for these decision days that are regularly scheduled. This is the first one after a recent multi-week hiatus or break that the Supreme Court had. So we were expecting this news today or in ensuing decision days. They've been deliberating over this, but the decision was also fairly definitive, not unanimous, but I think 6-3 in favor of striking down these tariffs. So they took the time to evaluate the information. They heard from the parties to the case, and they've made this announcement today.
I accidentally printed the ruling. It is not. It's not a thin. This is the ruling here. I think I'm going to hurt my back. That is the ruling there. I printed it by accident. I think it was a few pages. So they did take their time with this. What does this mean when it comes to negotiations? How does Canada handle this? What do they do with this?
Yeah, in some ways, I feel like today's news is positive for Canada, but in a mixed sense. It's hard to ever determine what developments with the U.S. exactly are going to mean until we see what actually unfolds. But it is in some ways very positive that Canada has not yet entered into an agreement with the U.S. or not made major concessions in hopes of relief, for example, from these tariffs. We've now seen the legality of them determined to be illegal. They're being struck down. Of course, it's very possible that Trump pivots to new mechanisms, again, to be imposing tariffs. But Canada is much better positioned and situated compared to many partners around the world, both because of the protections that CUSMA has afforded even amid this ambiguity, and also because we didn't rush to a bad deal and instead have been waiting and holding out as part of conversations to get to a CUSMA process.
And now I believe there's about 5 different options that Trump could use to kind of bring back these tariffs at varying levels. What would change his mind about bringing them back? Is there anything in the U.S. that might change his mind about bringing them back?
Yeah, domestic political pressure potentially, but he doesn't seem to be chastened by that so far. There has definitely been a broad-based, multi-partisan understanding in the United States that tariffs are a net negative for the American people. While the president has represented them as a source of funds, it's actually Americans themselves who are paying for these tariffs in so many cases, directly in the cost of everyday goods that they require in their life. And so that could be, as we head towards political milestones in the United States, midterm elections, et cetera, that could be something where he feels some pressure to pivot away. But we're not seeing that yet. And I have to say that the history with President Trump is such that typically when he gets his wrist slapped or he is told that he can't do something, he doesn't generally take that lightly and step away from the plan that he had. He tries to reinvent that plan and find a different way to proceed.
Now, and then we have seen some cracks. We've seen some Republicans in the House side with the Democrats, but probably not enough to convince Trump on this. Is there that danger that he may come back with something worse?
Absolutely. And we are having so many different intersecting and co-located issues right now. We have not just on tariffs, keeping in mind that this is one category of tariffs that have been struck down today. We still have the Section 232 tariffs that are in place on some key Canadian sectors that will continue to wreak havoc there, sectors that were already under tremendous economic pressures independent of tariffs, labor realities, et cetera. So for them to still be facing these tariffs is challenging. It's possible, for example, and who knows as we forecast the possible actions of the president, but he could increase those tariffs further. He could use other mechanisms to insert new tariffs into the situation. I think that Canadian businesses are potentially at significant risk, and that's where the Canadian government can play a key role in the weeks and months ahead of trying to get to this clearer agreement on CUSMA in hopes that that overarching agreement helps eliminate some of these side tariff issues.
And is there anything the government can do before then, or are companies going to have to kind of grin and bear it and eat eat any potential tariffs until we have a new deal?
Yeah, the government of Canada has already been doing a variety of actions. They've been providing industry supports. They've been engaging with stakeholders to hear from them about what they need in the interim to try to mitigate some of these impacts. We've seen, for example, in major project announcements, lots of moves to use Canadian steel and aluminum in our domestic projects while they're facing these tremendous tariff pressures from the United States. So I expect more of that in the time ahead, but I think what the government of Canada does will entirely depend, of course, on the nature of the next steps from the United States.
I was going to say, what kind of an impact does this have on the CUSMA negotiations? But they're so far away in the future. I mean, they're nearly, 4 months away. So much could happen before then. This is hardly the last thing before we get to the real talks about it. Where do you see them going if this holds? And where do you see the talks going with this ruling?
Yeah, I'd say yes and no. Are they a while away? The July 1st deadline, as it's being characterized, is a little bit of a confusing one for the general public and for people who follow this closely. July 1st, depending on who you ask and what country is interpreting things in what ways, is either the deadline to have resolved the situation or the deadline to decide what we do next. So what the process could be next. For example, opening formal talks between the three countries. So it's not clear where exactly we're at in this process. And even July 1st is a little bit of an arbitrary deadline. It's spelled out in the agreement, but that's not to say that things couldn't change, especially with the unpredictable reality of working with President Trump. So I expect this will still be a live issue, but the Canadian government has also been prudent to focus on interactions with emerging markets around the world, with other like-minded countries. For example, coming out of the Prime Minister's remarks at Davos about bringing together middle powers. So they'll be well served to keep focusing on that on a dual track while they also are having potential conversations with the U.S. and Mexico.
Okay, we have to wrap it up there, but Diamond, thank you as always for joining us. Appreciate it.
Thank you.
Diamond Eisinger is the former special advisor to Prime Minister Trudeau on Canada-U.S. relations. Market calls coming up next. Today on the show, we have Brianne Gardner. She is the Senior Wealth Manager at Velocity Investment Partners, Raymond James, and we'll be taking your questions on Canadian and U.S. large caps. Let's take one last look at the market, see how they are doing. And you can see the TSX bouncing back again. It's up almost a half a point and well into record territory, pushing towards 34,000. And the S&P 500 reacting to the news about the tariffs. The Supreme Court in the States, they're striking down the tariffs. It's up 0.65, and the NASDAQ liking it right now. It's up 1.1. That is it for Morning Markets. Thanks very much for joining us. Have yourself a great weekend.